Real estate. It's a term that sparks images of wealth, stability, and long-term growth. For generations, people have built fortunes through real estate. Why? Because it offers a unique combination of income and appreciation that's hard to beat. Think about it. People will always need a place to live, right? This constant demand makes real estate inherently valuable. But it's more than just providing shelter, it's about building a legacy. Investing in real estate is about taking control of your financial future. It's about generating passive income and watching your wealth grow over time. Are you ready to unlock the potential of real estate? Let's dive in. Real estate offers a unique set of advantages that make it a winning investment strategy. First, there's cash flow. When you own rental properties, you receive a steady stream of income from tenants. This cash flow can supplement your day job or even become your primary source of income. Second, real estate tends to appreciate over time. As the value of your property increases, so does your net worth. This appreciation can lead to significant wealth creation in the long run. Finally, real estate offers tax benefits. You can often deduct expenses like mortgage interest, property taxes, and depreciation, reducing your tax burden and boosting your returns. The world of real estate investing is vast and diverse, offering numerous opportunities for those willing to dive in. Let's explore some popular options and understand what makes each unique and potentially profitable. First, we have residential rentals. These include single-family homes, apartments, and condos that you rent out to tenants. It's a great way to generate consistent cash flow, as tenants pay rent monthly, providing a steady income stream. Next, we have commercial properties. Think office buildings, retail spaces, and warehouses. These properties often come with longer leases and higher rental income potential, making them attractive for long-term investments. Another option is REITs, or real estate investment trusts. REITs allow you to invest in real estate without actually owning physical property. They are similar to mutual funds that focus on real estate assets, providing a way to diversify your investment portfolio. Then there's house flipping. This strategy involves buying undervalued properties, renovating them, and selling them for a profit. It requires more capital and expertise, but can yield significant returns if done correctly. Understanding the market and having a good renovation team are key. Each of these investment types has its own set of risks and rewards. It's important to do thorough research and possibly consult with a financial advisor to determine which strategy aligns best with your financial goals and risk tolerance. Real estate investing can be a powerful way to build wealth and achieve financial independence. Whether you're looking for steady income, long-term growth, or quick profits, there's a real estate investment strategy for you. Many people believe that real estate investing requires a fortune to get started. While it's true that some strategies, like buying large apartment complexes, demand substantial capital, there are plenty of ways to begin with a smaller investment. For example, you can start with a down payment on a rental property. The amount you need will vary depending on the property's price and your loan terms. Typically, you'll need around 20% of the purchase price as a down payment. If you're looking for a lower entry point, REITs are a great option. You can invest in REITs with as little as a few $100s through a brokerage account. Section 5. Analyzing a deal, a step-by-step guide. Before you dive headfirst into any real estate investment, it's crucial to analyze the deal thoroughly. This ensures that you make informed decisions and maximize your returns. Here's a step-by-step guide to help you. First, calculate potential income. This involves looking at the property's rental potential and understanding the market rates. Determine the monthly rent you can realistically charge for the property. Research similar properties in the area to get an accurate estimate. Next, estimate expenses. Factor in costs like mortgage payments, property taxes, insurance, and maintenance. Don't forget to include unexpected expenses such as repairs and vacancies. Then, calculate cash flow. Subtract your estimated expenses from your potential rental income. This will give you a clear picture of your monthly cash flow. This is the cash flow you'll have left each month. Positive cash flow is essential for a successful investment. After that, analyze the neighborhood. The location of your property can significantly impact its value and rental potential. Research the area's growth potential, job market, and amenities. Look for signs of development and improvements in infrastructure. And finally, get a professional inspection. This step is crucial to uncover any hidden issues that could affect your investment. Always hire a qualified inspector to assess the property's condition and identify any potential repairs. This will save you from unexpected costs in the future and ensure the property is a sound investment. Section 6. Location, location, location. Why it matters. You've heard it before, and it's true. Location is paramount in real estate. Investing in a desirable and growing area can significantly impact your returns. Look for neighborhoods with strong rental demand, low vacancy rates, and a track record of appreciation. Consider factors like proximity to schools, parks, public transportation, and employment centers. Remember, a well-chosen location can attract quality tenants and increase the value of your investment over time. Section 7. Building your team of experts. Real estate investing is a team sport. Surround yourself with knowledgeable professionals who can guide you through the process. First, a real estate agent. A skilled agent can help you find properties, negotiate deals, and navigate the closing process. Next, a mortgage broker. A mortgage broker can shop around for the best loan terms and rates. Then, a real estate attorney. An attorney can review contracts, ensure legal compliance, and protect your interests. And finally, a property manager. If you don't want to manage your properties yourself, a property manager can handle tenant screening, rent collection, and maintenance. Section 8. Taking the first step. The first step is often the hardest. It's easy to get bogged down by information overload or fear of the unknown. But remember, you don't have to do everything at once. Start small. Educate yourself, attend webinars, read books, and connect with other investors. Consider starting with a REIT investment or attending local real estate meetups to learn from experienced investors. The key is to take action. The sooner you start, the sooner you can begin building your real estate portfolio and securing your financial future. Section 9. The power of leverage. One of the most powerful aspects of real estate investing is leverage. Leverage is a financial strategy that allows investors to amplify their potential returns by using borrowed capital. Leverage allows you to control a large asset with a relatively small amount of your own money. This means you can invest in properties that would otherwise be out of reach. When you take out a mortgage to buy a property, you're essentially using the bank's money to finance your investment. This enables you to spread your capital across multiple properties, diversifying your portfolio and reducing risk. As the property appreciates in value, your returns are magnified. This is because the appreciation is calculated on the total value of the property, not just your initial investment. For example, let's say you purchase a $200,000 property with a 20% down payment, which is $40,000. The remaining $160,000 is financed through a mortgage. If the property appreciates by 5%, your initial investment of $40,000 has now grown by $10,000, a 25% return, even though the property only increased in value by 5%. This demonstrates the power of leverage in real estate investing. By understanding and utilizing leverage, investors can significantly enhance their wealth-building potential. However, it's important to remember that leverage also comes with risks. If property values decline, the losses can be equally magnified. Therefore, it's crucial to conduct thorough research and have a solid risk management plan in place. With the right approach, leverage can be a powerful tool to achieve financial success in real estate. Section 10. Reaping the rewards. Income and appreciation. Real estate offers a unique combination of income and appreciation that can accelerate your path to financial freedom. As you build your portfolio of rental properties, the cash flow from rent payments can create passive income streams that grow over time. This passive income can provide financial security and freedom from the traditional 9-to-5 grind. Simultaneously, your properties are likely appreciating in value. This appreciation builds equity and increases your net worth, setting you up for a comfortable retirement or allowing you to reinvest in additional properties. Section 11. Your journey to financial freedom. Investing in real estate is more than just buying properties. It's about taking control of your financial destiny. It's about building a legacy of wealth and security for yourself and your loved ones. Remember, the path to financial freedom is a journey, not a race. Take your time, educate yourself, and surround yourself with a supportive team. Start small, learn from your experiences, and never stop growing. We're excited to be a part of your real estate investing journey. Feel free to share your questions, insights, and successes with us. Together, let's unlock the incredible potential of real estate and create a brighter financial future.